What's up, guys? William Ryan here, back with a little streaming service. And so we're just going to be taking a look at the trades that I took um, today, well, at least in the past like 2.5 hours. And so we're going to take a look at the context behind these trades, why I took them, and what I expect going forward into the next couple of hours. So first and foremost, we're going to stay on Bitcoin for now. We'll go over to my Ethereum scalp later. And so actually we'll go to the 30-minute chart. And so we have here, okay, I'm just going to get all this off for now. Okay, so we have optimal advanced signatures to go long, right? Price closed above the hourly fair value gap, okay, making a balanced price range. So when price comes back through a SIBI, right, especially with one candle here, right, nice strong bullish candle, when price comes back down into this area, I'm going to be looking to go long. And so that's exactly what I did. Okay, so we have the balanced price range, the fair value gap in here. And so I went long when we were in this balanced price range. And so price has since expanded through, okay, and taken out this high. I want to see price get up here. All right, but for the sake of this position, I'm actually practicing pyramiding and getting data on pyramiding, and just testing out some things in regards to that. So dropping down into the 3-minute time frame. Okay, we'll actually go to the 5 first. So we have optimal advanced signatures to go long in here. We're oversold. On the 3-minute, looks a little bit better. Okay, so our stop loss is actually going to go, yeah, pretty much to break even, right below the body of this candle. So we want to see higher prices out of here. I would have much rather to see price just leave from this balanced price range here, right? I would have much rather see price respect that and just continue higher for the equal highs in our TP. But so if this trade idea is going to be correct still, I want to see price get back above this balanced price range with some speed. Okay, that would be ideal. Okay, so we'll see what we get here. Whenever you're pyramiding, guys, the way that I pyramid, so I'm in on the higher time frame and I start to scale in on the lower time frame. So every time I pyramid and my position goes in a profit, what I'll do is I'll put my stop to break even. So here I'm looking for a big return in terms of percentage on the account. Okay, I'm not just targeting 4% or my typical 2-to-1. I'm actually targeting a large sum of percentage, right? So what I'm trying to do is I'm trying to scale in on the higher time frame, get in on the lower time frame, okay? And by doing this, my first trade here is in profit, okay? So I have running profits here. So when I get in at a discount here with the optimal advanced setup again, my stop loss on both positions are going to go below this low, right? Basically to break even. And so that's how I pyramid, guys. So I'm in 2 positions. I'm not risking anything at this point, targeting about 16, 17% on the account, right? So that's a lot. And I won't be teaching, my teachings won't be focused predominantly on pyramiding because you don't need it, right? But I'm just practicing and getting some data on my pyramiding plan. And so like I said, we don't want to trade back below here, right? We want to see speed and magnitude for the equal highs on the half-hour chart, on the 30-minute. So these equal highs up here, we'd want to see price just run for that, okay, targeting the buy side liquidity. And so far, we're not getting that, obviously. So we'll see what happens. Okay, by the looks of it, closing below this balanced price range, closing below this gap is not ideal, to say the least. Okay, so closing below this gap will not be the best thing for our position. I would much rather see this candle and the bodies close back above this gap in here. That's what I would personally like to see. So moving right along, we'll let that trade breathe and we'll come back to it. Just going to go over the setup that I took here on the lower time frame. So obviously we were expecting bullish prices on Bitcoin, and so that means that we're going to be looking for bullish prices on Ethereum. And the setup that I took in here, right, was on the 1 minute chart. Okay, so we had the run on liquidity here. Okay, the market structure shift, right? Taking out this high, this becomes a breaker. This breaker held, we rallied. Okay, coming back down into this balanced price range. So when price came down into that balanced price range, I went long. Okay, 5 lots, okay, on the demo account. And so price began to rally away from here, right? I would have much rather to see price just continue rallying like this and for price not to come back down in here. So what I actually ended up doing was when price came back down into here, I took off half my position. Okay, and the reason being is my job as a trader is to preserve capital. Okay, if price is just poking its head above here when I'm expecting a low resistance liquidity run, right, and price comes back down towards our point of entry, then I'm going to take half of my trade off. And some of you may agree with that, some of you may not, but my job as a trader is to preserve capital. And if I'm not seeing exactly what I want to see in price, I'm going to remove a little bit of my risk. And so in this position, right, price came down into this balanced price range again, reclaimed it, right? So by taking off half my position, I lowered or removed half of my exposure. I removed myself, right, preserved my capital. And I also, right, put myself in a position to still compound capital, right? Those are our two jobs as traders, is to preserve capital and to compound capital. So I did both here, right? Price came back down into our balanced price range. I took half off, okay, removing risk, right? But that doesn't mean just because price came down here, I'm not going to take off my whole position. Why? Because the trade is still valid and price is looking like it's in a market maker buy model, which is exactly what we got. So I put myself in a position to preserve capital, right? And I also put myself in a position to still compound capital. So the trade that we got in here, right? I got out at roughly a 2-to-1 here. Okay, just above these highs. 2.5 to 1, right? And then I got out. Here at Optimal Advanced, we just target 2-to-1 setups because here we focus on profitability, not perfection. And we look for frameworks, right, that are consistent, that give us confidence, that help us detach from the money, right? Traders have a perfection problem and a money problem. So by targeting a 2-to-1 setup, getting in and getting out, okay, this boosts our confidence, right? We do the same thing over and over and over and over. So this is this repetitive process is going to induce a lot of confidence. Okay, it's also going to be reflective in our hit rate, and so that's very, very pleasurable to the eye when we see we have a high hit rate, and that also gives us a large amount of confidence, right? And also the greed side of things. Okay, so greed, right, is another issue that we have as traders. And so by targeting the 2-to-1 risk to reward ratio, right, this is going to remove greed. Okay, your attachment to money is going to remove itself. Okay, we want to get out of that 2-to-1, and that's it. Right, if you're risking 2% on a trade, okay, and you do one of those a week, you're going to make 8% return in a month, which is over 100% return in a year. So we don't need large amounts of risk to reward ratios. We don't need a 5R. We don't need a 10R. We don't need a 3R. Okay, a 2R solves a lot of traders' issues. Okay, it solves fear in a sense and solves greed, right? And those are the two main battles that we have as traders emotionally. And by targeting a 2-to-1R, okay, this solves a lot of those problems. Right, so this was a very, very nice trade. We have time. Okay, so the OA framework. We have 1, so time. And the low comes in, guys. If you guys watch this YouTube channel, we know that price is going to tend to create highs and lows at the times of 3, 6, 9, and 12, AM or PM. This low that comes in here, it comes in at 6:16 PM. And we begin our market maker model from this time. Okay, so time we have 6 p.m. Eastern Standard Time, New York. 2, we have price. Okay, and the price comes in at 2,240, big figure. Okay, so 4-0, the 0 is what we are highlighting. And then the third thing that we have is our repeating fractal with the market maker buy model. So this was a very, very beautiful trade, guys. And that's the good thing about Optimal Advance. It solves a lot of problems concerning traders' emotions and the conflicts that we have with our flesh, right? So we solve being impulsive through the William percent R because it gives us the time, the price, the PD arrays that are going to get used, right? We have the 2-to-1 risk to reward ratio, okay, which deteriorates greed. It chips away at greed and gives us confidence, okay, and conviction, right? And that's just a couple of the things that are so special about the Optimal Advance trading setup and the program, the one-on-one mentorship. And so this setup, guys, it occurs all the time. All the time. It's always occurring. And so yeah, this was a very, very beautiful setup. We're going to hop back over to Bitcoin and see what's going on over here, whether we're getting stopped out or not. Yeah, so we want to see speed and magnitude from this area. We don't really want to see price hang around in here much longer, right? Because we want to see those low resistance liquidity around signatures that we get through expansions, okay? And big bulky candles like this, right? These are the candles that we want to see after our point of entry, especially when we're looking at Optimal Advanced setups. All right, guys, and the other thing is too that I wanted to mention that I talked with my student today. So if you're familiar with ICT, you know of, and if you've been to month 5 in the core content, Okay, we understand the look back period and the cast forward. So IPTA data ranges, interbank price delivery algorithm. We know that order flow oftentimes is going to change, right? Quarterly shifts. So after every 3, 6, 9, 12 months, 3-month intervals. So we can apply that principle of IPTA data ranges and we can apply it to the hourly time frame, right? If you're a scalper like myself, we can use that concept and apply it to the fractal on the hourly chart. So we're going to be looking for highs and lows, just like we're going to be looking for highs and lows to be made and order flow to be changed every 3, 6, 9, and 12 months. We're going to be looking for highs and lows to form at these times as well. Price is fractal, right? So we need to look at all the concepts in its completeness with ICT, and we need to apply it to a lower time frame if we can, right? And in that instance with the IPTA data ranges, we can. And I find it very, very useful right in the charts. Look at this high, okay? The high forms at 4 o'clock here, but here's 3, right? The high forms just outside of that candle, right? Here, the high forms at 5, okay? Just before 6 o'clock. We have a high that gets posted. 6 is the next candle. We're going to be looking for expansion, right? After that high is made around that time. The high over here, what time is it made? It's made at 9 a.m. 9 a.m. Okay, so the significant highs and lows, especially in New York session, guys, we're going to want to be utilizing, right? The low that gets made here, what time does the low get made? Balance price range, fair value gap, okay, William percent R, okay, we have the characteristics that smart money is going to be entering the marketplace long in here. The low comes in at 12, which is one of the numbers that we look for. This high over here comes in at 12. The high over here comes in at roughly 12. So you can see the significant highs and lows that we see in our optimal advanced setup, especially on the hourly time frame, 30-minute and 15-minute, are going to come within those windows of time. Yeah, so we go down into a 2-minute chart here. We're going to see that we have optimal advanced setups to go short. Okay, the higher high here. So we failed, right, to move higher, right? This is also, we have to take this into account, right? This low is probably going to get taken out, right? But we're anticipating higher prices from here, right? From my entry, I want to see candles like this. Did we get candles like that? No, we didn't. We didn't get candles like that. I'm just going to leave it and let it play out. Right? So we didn't get the candles. We didn't get the delivery that we were expecting. Right? And then price comes down to the order block. We come back up, trade to the top of this balance price range. Order block, fair value gap. Right? You can clearly see we have that set up to go short. Okay. If this low gets taken out, guys, then I think our stop loss is in trouble. But if we just post up here and create equal lows and start to reject higher, then we may be okay. But if we fly through here, obviously we're probably going to get stopped out at break even. And the pyramided position will get hit at break even. But there is still a chance here, a very small one at that. right, for this order block and this balanced price range to hold, right? We just need price to get back above this area in here. Okay, if we get back above this candle's high and trade through this balanced price range as well, or this fair value gap, okay, I like our chances of price targeting the hourly highs up here. Crypto God, my apologies, brother, if you're still watching. So what you're going to want to do for the YIPTA data ranges, you're going to want to go to ICT. It's in month 5. Okay, so you're going to want to go to month 5. My apologies, brother, if you're still watching. Yeah, so you're going to want to go to month 5 on ICT's YouTube channel and search for the video. I'm not too sure which video it is, but I would definitely recommend checking that out. And once you go through that, right, like I'm saying here, you can apply those, you can apply that concept to the hourly chart, right? Because there's 12 hours, right? The day is split in half, 24 hours, there's 12 hours, right? Or like there's 12 hours split up. There's 2 sections of 12 hours. Right? There's 12 months in a year. So in IPTA data ranges, highs and lows are going to be created, okay, every 3 months, every 6 months, every 9 months, every 12 months. So the order flow is going to shift. So we can reasonably expect price to create highs and lows within those periods of time, right? 3, 6, 9, 12. And so we can apply that same principle because there is 24 hours in a day. We can split that in half, right? So that's 12 hours, 12 months. So we can apply the 3, 6, 9, 12 quarterly shift concept and IPTA data ranges concept, and we can apply it to the hourly chart. So we're just fractaling down the concept and utilizing it on a smaller time frame. Crypto God, what crypto do you trade? What do you trade predominantly? And do you day trade it, or is it just like a long-term hold type thing? Nice, brother. Nice, man. Yeah, they're very, very useful in terms of catching highs and lows. So the 20, 40, 60 is just referring to months because there's 20 trading days in a month. Right? And then within those, this is a lot to explain, brother, on here, to be completely honest with you. And it's very complex. Just put this in your notes, dude, if you want to check it out. So quarterly shifts, right? And then IPTA data ranges. And I also want you to search up on YouTube 90-minute macros and study that. And the 20, 40, 60 day look back is not my concept, it's ICT concept. So you're going to have to go over to his channel to study that and to check that out. I don't teach that necessarily over here. Yeah, I mean, like, if you're a scalper and day trader like myself, um, I don't necessarily need the IPTA data ranges, so 20, 40, 60 day look back and cast forward. I don't use it at all, to be completely honest with you. When it comes to higher time frame analysis, I'm just predominantly looking at SMT divergence on 4-hour, daily, and weekly time frames to capture highs and lows on the higher time frames, because typically before the week starts, I'll look for SMT on the 4-hour chart or daily chart to give me the weekly direction. If you go through all the pairs and look at SMT divergence, you'll get a good understanding of the weekly direction pretty quick for the upcoming week. Yeah, we're going to get stopped out here, guys, the pyramiding position. And that 2-minute setup looks like it's going to hold. Let's take a look at this. Let's see if there's any SMT on these highs. Nope. Right, guys, and then here's the other thing too. So this is my mistake. So I should have been taking partials above this high, right? Why? Because at the same time Bitcoin was taking out this high, we were failing to take out this high. So that's SMT divergence in and of itself. Okay, so I should have been taking partials above here. Okay, I should have been paying myself, right? And that's the other thing that we have to be aware of in consolidating markets. When markets are consolidating like we have on the hourly chart, right? This is kind of a mess in here, right? So we got to be nimble, we got to be quick, and we have to be taking partials, especially in conditions like this, right? If markets are trending and they're moving very, very nicely, then we can hold for the whole 2-to-1. But in this case, right, we really want to be taking partials, and that's something that I didn't do here. Okay, that's something that I can do better in the future. Just gonna get all this off. Notice how the balanced price range here on the buy or on the sell side of the curve, right? When we traded back below that gap that I have noted over here, okay, on the 3-minute chart, notice the bodies in here and notice price respecting the premium of that balanced price range. So you're really going to want to keep those balanced price ranges in your chart, right? Because they get utilized more than once, a lot of times. I didn't even take in this guy's name is Crypto God 369. Oh, that's funny. Excuse me. I'm still leaning towards the buy side getting taken out here, right? And if I didn't pyramid that position, right, my order would still be here. I would be at break even here though as well, and just targeting the high above here, right? But because I pyramided that position, right, I got stopped out at break even a little bit early, which is okay because I'm looking for data on my pyramiding plan. Whoops. If you guys are in the chat, put in the comments where you guys are from. Mm. This balance price range in here, sorry. Holding price. On the good old 1 minute chart. Like if that bullish bias is still going to stand, if we're still going to be targeting these equal highs on the hourly chart, we really need to get back above this balance price range here that is noted on the 3 minute chart. So we really need to get back above this as soon as possible for the bulls still to be in play. India, nice, man. That's awesome. The other people in the chat are shy. The other people who are watching, I guess. So, if bullishness is going to be in play here, guys, we have potential optimal advanced setups forming. And we're going to check this out. See if we get it. Right? Market maker buy model potentially unfolding. It's too bad we got stopped out right here. That's typically where it's pretty much where my stop loss was. That's okay. But if we get price to expand and then come back down into this area here, that would have been a good opportunity for optimal advanced longs. So if price comes back down into this area here, if the bulls are going to hold, right, if we're going to be targeting the equal highs on that hourly chart, okay, this order block has to hold. There's no if, ands, or buts about it. We have to hold. You want to see speed and magnitude through here, through this balanced price range and through this high. That would give us a potential market structure shift. Balanced price range, price came into it, and so far we've left it. We want to see this balanced price range get traded through with speed. Yeah. So this fair value gap could get utilized if we want to continue higher for this buy side liquidity and the buy side liquidity here. We just want to see speed and magnitude towards the buy side here. That's personally where I think we're going, is we're going to be targeting the buy side up here, and we'll ultimately see what we get. Like I said, if we get back above this 3-minute balanced price range and start to move higher, then I'm going to consider this as a market maker buy model occurring. And we'll see if we can get like a setup on like the 15-second or the 30-second. To be completely honest, I'm not looking for any micro type of setup unless we get back above this balanced price range. Then and only then will I be looking for my optimal advanced setup. Okay, potentially have a liquidity raid, and then once we break above here, it'll be a market structure shift on the 1 minute, and then we'll be looking for those optimal advanced setups, either on the 30-second or the 15-second chart. So I want to see if this fair value gap, balanced price range, mitigation will hold. Equal highs up here. We'll see if this price action holds. So we want to see if price will hold in here. Okay, so we have within % our signatures. we got a really deep retracement. We're targeting the buy side liquidity above here. So this deep of a retracement is not ideal and could be indicative of us being wrong. But at this present time, if we can respect here and trade back through this high here, then I'll be looking for optimal advanced setups on the 1 minute time frame to go long when price comes back to this balanced price range. So basically what I would want to see if this area is going to hold, if and when it does, right? We have the setup here on a lower time frame, but I'm not going to execute because we are below this balanced price range. So I want to see price trade above here. Okay. Then price come back down. Whoa, what's going on here? Okay, price to come back down, giving us optimal advanced setups to then go long. Okay, for the buy side. So this will complete a market maker buy model, but until we trade back above this balanced price range, I am not too interested. Right, so we want to see speed and magnitude. Okay, leaving these areas, right? We want to see speed and magnitude taking out the immediate highs that we have here. We don't want to see price hang around in here. We don't want to see price hang out at the bottom of this balanced price range, right? We want to see price trade through this range with a lot of speed. Okay, and like I keep saying, if and when that happens, I will look for optimal advanced setups on the 1 minute time frame to ultimately start that market maker buy model again. What is going on with my computer right now? I want to take a stab long on Ethereum, to be honest, but gonna stick to my rules. I want to get back above this balanced price range. We want to see this with speed, guys, like a lot of speed, like candles like this or like this. We want to see a lot of speed. Speed here. We need some speed. Look how beautiful that is, though. Came down into the balanced price range on the 1 minute. Started making higher highs and higher lows. We have optimal advanced setups to go long. Okay, and now we just want to see this exact same fractal here on Bitcoin from the 30-second chart. We want to see it on the 1 minute chart. So you're going to see when I go to the 1 minute, Okay. Let's get this out of the way. Okay, that we're going to have potential optimal advance setups here. So the optimal advance, right, the Williams percent R is currently in the middle of the range, right? So this is good. This is what we want to see for SMT divergence for when that retracement, if and when it does happen, comes back down into this area here. Okay, if and when price trades back above, we come down into this order block. Hopefully there's going to be a fair value gap here. And at the same time, if price comes back above, right, we want to see this with a lot of speed in here, to be honest with you. Lots of speed. So if price comes up, and then price comes down, giving us optimal advanced setups, then we're going to want to go long in here. Okay, for the residing buy side on the 1 minute, or sorry, on the 60-minute chart, the hourly chart. Right, so we got those optimal advanced setups on the 30-second chart. Pretty nice. But again, I couldn't take this. I mean, I could have, but I wanted to see price get back above that balanced price range where we originated our pyramiding position. I think I like Ethereum a little bit better. It's showing a little bit more speed to the upside. And there's also SMT here as well, guys. Right, we have SMT failing to take out that low, but good old Ethereum is taking out the low. So if and when we get back down here, giving us optimal advanced setups to go long on Ethereum, we're going to do so. But there is a potential that we just trade higher with speed towards the highs that we have delineated here, this line up here. But I do really like this balanced price range with this fair value gap and this order block. Okay, I really like that. And I like the liquidity that we have resting above here. So we have a nice trendline phantom, right? And this equates to a low resistance liquidity run. So when we have layered highs like this, so we have a high here, a high here, and a high here, this is going to be a low resistance liquidity run, meaning that price is going to want to rally through these highs relatively quickly, right? So say if it was the other way around and we had highs like this, okay, where liquidity just got previously taken, okay, that's going to be a high resistance liquidity run, and we're going to want to not necessarily stay away from those, but we're going to want to be more nimble with our trade setups and be extra selective. I'd be lying if I said I didn't like what I'm seeing here. I don't really want to take a trade unless we're back above this balanced price range on Bitcoin. But we're about to get optimal advanced setups to go long on Ethereum, and we have pretty much have everything that we need to go long. So we have order block, fair value gap. So at the consequent encroachment of this balanced price range, right, we have these fair value gaps. We just got our optimal advance William percent R characteristics. And we're going to see what we get. May not even give us an opportunity. Yeah. Yep. So like I just went over, guys, this is how we anticipate the optimal advanced setup. So we want to have our eye constantly on the William percent R. Okay. Looking for that fractal to unfold. So we had, okay, this low in the William percent R. If price came down into this area here, okay, the 2,247.65, either the 80 or the 50, I would have went long, right? Because we have the order block, the fair value gap, we have price, and we have time. Okay, it's currently 9:24, right? Accompanied by the balanced price range, SMT on the low down here. So we would reasonably expect price to come down into here and to expand higher for at least a 2-to-1 risk to reward. And that's how we anticipate setups. Notice how we're having a tough time getting through this balanced price range. Okay, we've come up to it once, twice, 3 times, okay, 4 times, 5 times. It's really struggling to get back above this area. Right, and that's why we want to extend these fair value gaps out in time that are very, very significant. Right, the ones that are kind of in your face, very similar to this one. Right, we want to be keeping these on our chart and extending them out in time. Okay, it's going to give us real-time support and resistance, especially when it's accompanied by order blocks, breakers, or fair value gaps. Well, it's not. Again, guys, I would love to take longs in here, right, in this area here. If we get optimal advanced setups, if and when price comes down here, guys, I'm going to go long. But I just want you guys to know that just based off of price not trading back above here, in my opinion, this trade becomes low probability. It's still valid in terms of everything that we look for in a setup, but it just goes to show if we do lose this trade, then our direction is wrong, and it's just a good lesson for the community, for my students, for myself, that if we don't have the correct directional bias and the draw on liquidity is correct, then we're going to get stopped out, and these signatures are not going to be efficient, right? So I want to see price dive down into here. 47.50 is a good level. I like that. And even 65 I like, consequent encroachment of this gap, right? But if we are wrong, which watch, it looks like we're going to be wrong just based off the price action that we're getting on Bitcoin. Watch, if we are wrong on our directional bias, this price action here, these candles are going to fly through this gap, right? But if our directional bias is correct, moving higher, then we're going to come down in here and move away and secure our 2-to-1. But just based on the price action over here, it looks like we may, if we do come into this area here, we may just slide right through to continue attacking sell side. So we got a deep dive on the William %R. I wish she tanked into here. Would have been really nice. But I like how we're consolidating at this point. Consolidating above the fair value gap or the balanced price range. So we're consolidating above this FVG, this BPR, and this order block. So if and when price were to come down into here, it would be consolidation, manipulation, distribution higher. And at this point, guys, because we've already gotten our William %R signatures, right? And if we do come back down here, to be honest, am not interested in the trade. I would have rather price to come down quick, right, as we were creating that SMT divergence on the William %R. Because the fact that we are not trading back above this balanced price range indicates to us that we may be on the wrong side. Okay, that we may not be bullish, we may be bearish. The 48 level in here as well, at the top of the fair value gap. 47.50 at the consequent encroachment of the BPR. And at the low, we have 46.80. Let's check the 2-minute chart here quick. Yeah. The fact that we're not getting low resistance liquidity runs higher indicates to me that this over here is going to fail. That this setup here may not, in fact, hold. And that is why I'm not going to take the setup. So if we had more confirmation over here on Bitcoin that we were back above this balanced price range, okay, I would be going long in here right now. But because we don't have that, until that happens, we get back above this range in here, I'm hands off, right? I want to be looking for longs, but I want to be looking for longs only above this balanced price range and these highs. Everything looks perfect here, right? Consolidation, manipulation into the gap, into the balanced price range, the order block, into some institutional levels. We have time. It's currently 9:34, right? But because we're not seeing what we want to see on the higher time frame, because we're not seeing low resistance liquidity runs, because we're not seeing bullish order flow really be prominent in these markets right now, I'm not taking this setup. We've also on the William percent R came right back up, right, and then right down, right? That's typically not what we want to see. We want to see the William percent R be in sync with these candles. So as these candles were to come down, we would want to see the William percent R come down at the same time. We did not get that. The William percent R dove below the low as we were still here. And that's typically what we don't want to see. And so this is how we avoid getting ourselves into trouble. Yes, we have everything that we need to enter a position, but is the context there? Is the higher time frame showing us that we want to be bullish? And the answer to that is no. And that's why we completely avoided this setup. Once we trade below and close below this gap, guys, I'm going to head off, and that'll be it for the first live stream. So we worked on pyramiding today, and I really wanted to gather and collect some data on my pyramiding plan, the GT3 IPE pyramiding plan. And so we got some data. We're going to go back and review the session. And implement anything that I need to implement. Obviously, the optimal advanced setup is very, very frequent. It works a lot of the time. And so if you're just joining the stream, go back and watch the rest of it, the whole thing. Okay, I explained the trades that I took, right? I had a nice little scalp on Ethereum that you can see on my Instagram story. The hourly chart, the hourly setup on Bitcoin was very, very beautiful. I ended up trying to pyramid the position because the 2-to-1 wasn't going to be secured until price got above the equal highs on the hourly chart. So I just decided to pyramid and try and get some data there. And so yeah, guys, I really hope you guys found this insightful. I'm going to be streaming a lot more on the weekends. Throughout the week, it's going to be tough because I'm going to be having students to teach and to pour my effort and my time into, and to serve and prioritize them. So maybe I'll stream once a week, twice a week. And until next time, guys, we'll see you another time.